Good afternoon. This is Chris Brecher with the Simpler Stocks free video for March 1st, 2016. Today is Leap Day, February 29th, but this is for Tuesday, March 1st. Basically, the market today was all about that certain things acted bad all day. I had no idea why the ESs were up in the first place when I watched certain things like the banks act poorly and watching the NASDAQ stocks not acting that great. This is what happened today. Right now, we have the ESs down 12.25. Let me move this over so you can see it better. You have the NQs down 25. You have the Russell outperforming, which I've been talking about for weeks. It needed to. You have the bonds not doing much. You have the Nikkei down 320. Now, I'm going to show you something really interesting with that. All day, the rails acted weak and the transports were down 60. You had the advanced decline, actually more advancers than decliners. Not by much, but no matter what the ESs were doing, the advanced declines wouldn't go negative. Other thing is you had oil up $1.10. This is the first day I can remember where oil was up more than $1 and the ES is down over 10 points. Very interesting. So let me show you what actually happened today on how I think things shaped up. Basically what happened is we got, and I'm going to take off the futures. Basically what we got today is these are the ESs on the left. And what we've been talking about for a long time on the daily and the weekly charts is how the ESs and the NQs are starting to diverge. Not by a lot, but a little. What I mean by that is you're seeing the ESs try to go up and break this resistance while the NQs are a lot below that resistance. Usually the NQs are the things that lead the ESs. So the NQ is the NASDAQ futures. ES is the SPX, the S&P 500 futures. We get this thing right here, right around 1250 where we've been stopping. Now, why do you stop right at 1250? Now, I'm not like Mr. King or Queen when it comes to Fibonacci's. Of course, we have the Fibonacci Queen. That's why I said that. But check out 1800 and 2100 and take half of that, which is 150. And where does that put you? Put you exactly at 1250. It's actually, if you do it exactly and you actually put the extensions up here, which I don't like how they're done on Thinkorswim, it goes to about 1957, so that's close enough. And we stopped right there on a dime. Now the key is that's one of the reasons we sold off. Another thing you should know, the 61.8 retracement is exactly at that 1988 that I keep talking about. I didn't look at it as a Fibonacci retracement. I looked at it, there's resistance. So here's one resistance, here's the second. And so far, you're seeing what's happening. So, you know, really the resistance is right here. Sorry, I drew it wrong. And here. And so far, so good, that's acted like this. Now, from an intraday basis, this is what we saw. We saw the ESs just rally intraday, you know, short term. And I was watching the NQs out of the corner of my eye while I'm on live. And I'm watching this, that when the ESs were right here, right there, the NQs are already slowly losing a little bit of momentum. Now you might be like, what am I talking about? I was looking at the Googles of the world, and I was watching Google right here at 10 o'clock, that when this was selling off right in this area, this was already selling off. It just didn't have the oomph today. And sure enough, then Google closes on its low. Now we'll get to this in a minute. Couple other things I noticed, that as the ESs was rallying today, right in this area on the left, see over here? One of the things that had sort of kept the market up the end of last week was the JP Morgans of the world. As you see, they started selling off on Friday, and this morning they just couldn't get under their ATR trailing stop. And just they acted weak all day. And when they act that weak, usually you're not going to see the ESs stay up, and they didn't. Now, another thing in here, this is right from my class on ATR trailing stops, and what we talked about, actually, we had a free class last week. And let me go to this, and I want you to know what I'm talking about because it's pretty exciting. Every week, and I'm going to show you my homepage actually from Simpler Stocks, if I can get it to work. Give me a second here. And basically what we did is, I can't get to it right now, we do a class almost every week where we do a 15-minute to an hour class on different indicators. And last week we did on the ATR trailing stop. What I want you to see in here is that the ATR trailing stop on this, it's basically, I'm not going to get into it all now, but if you get a subscription, even the trial subscription, you can go and get on the classes. And it's really neat how all that works. Now, I want you to realize that. That you get these free study guides, you get free videos, and then we have like quizzes. It's really exciting, all the quizzes we have. And what's happening on that is one of them we had last week, a class was on the ATR trailing stops. So you can see in here, they work great. So last week we had ATR trailing stops. 2 weeks ago we had about the MACD. Now one thing we were showing in there is to be able to short a stock, you love to see it cross this ATR trailing stop, then hook up and create an overbought condition. That's called a negative reversal. So what happened was now it gets overbought under the ATR trailing stop, and that's a great time to short it. Usually what people do, and traders like me do, is we take the 15-minute and put it on the left once we see some kind of potential trade. So put JP Morgan on the left and put this on a 15-minute. Now I have all my indicators up there. You could just put the ATR trailing stop if you want. And then you take a shorter term chart and check that out. So right here where it got overbought and it's under the ATR trailing stop, but you're like, well, where do I know to initiate the short? Well, it's not on the way up. It's when it breaks this ATR trailing stop on a 2-minute. If you shorted right there, 67.30, and just rode the ATR train all the way down, check where you would have finally gotten stopped out. Well, nowhere. Now, if you're a day trader, you would have gotten out by the end of the day, but you're talking about a trade from 57.30 to 56.30. You would have made $1 on a bank stock that's a $50 stock. It worked just perfect. So those are the type of things we talk about on the premium side. We have a $7 30-day trial. We've had thousands of people sign up for it, and we've had a retention rate that is higher than anybody else in the industry. We include the chat. We include a lot of training and a lot of ways to learn how to make money. So I hope you can join us. Like I said, I'll be on tomorrow. It's a $7 30-day trial, and like I said, just go to the site, simplerstocks.com, and you'll see how to sign up. Wanted to add one thing to the end of the videos is my boss, John Carter, is having a great webinar on Tuesday at March 1st at 7 p.m. Central, just called on Options Trading Made Simple. Now, you have to understand, number one, this is free. Number two, he is like a legend in the trading environment. And if you have the chance, you have to register for this. It's a great webinar. I'm going to watch it. Well, of course, I'm watching it. But I would everything he says helps me trading. He's that good. So if you get a chance, try to do this. It's at March 1st, Tuesday at 7 p.m. Central. So everyone take care. I will talk to you tomorrow.